I want to welcome you to this webinar that's going to talk about what many people had considered a rather dull investment that our grandparents used to invest in, but yet has been one of the powering forces in the financial industry since certainly the meltdown, but even going back over the last, so shall we call, the decade of nothing. And this slide really proves this point. Even though I don't think anybody will complain that time is the true teller of things, but here is the performance of preferreds since 1900 when compared to corporate bonds. And by the way, it's quite interesting to note that this actually stands up very well when you consider it against even common stocks. It is just amazing how they have been a winning investment. Now, since 1990, which puts it in certainly more modern terms, you can see that really preferred stocks have been in a statistical dead heat with common stocks. And if you want to make it easy on yourself, I always tell people just refer to preferred stocks as preferreds. They are somewhere between a common stock and a bond, and it really is helpful just to see them differently. Now, what we're going to talk about is even as stock traders, that we have an edge on these securities, and really the whole idea of this add-on is to allow people to capitalize on their trading skills on a security that many people simply don't know much about. Keep in mind that many people will bring up that, oh, preferred stocks have not kept pace with inflation. That's simply not true. As you can see on this slide, they have performed very well on an inflation-adjusted basis. The big difference between preferreds and common stocks is how you make your money. You mainly make it as far as just holding it in your portfolios on the fact that they pay such phenomenally high dividend yields, which again makes them more like a corporate bond. Now, an area that certainly we've all learned to have to deal with, and that's certainly why trading platforms and certainly trading software like MetaStock and other things have helped us with this, is the simple fact that we have had to deal with an unusually large number of negative years. When we think of certainly the drubbing that many people took, certainly from 2000 to 2002, and certainly from the later part of 2007 to the early part of 2009, we've all realized a good defense is critically important if you want to maintain the gains you've had. And as you look at preferreds, yes, they also have some volatility. Nothing close to common stocks. And by the way, we're looking at price movement in these securities. But even in the case of corporate bonds, there are some negative years. But needless to say, certainly not nearly as bad as it is with common stocks. Looking at broad market analysis, for those of you who have been students of technical analysis for a long time, you know there's investment analysis and there is market analysis. And by the way, if you have not seen my book on income investing, I do in very deep detail lay out why market analysis is equal, if not more important, on income investments like preferred stocks and corporate bonds as it is even with growth investments or common stocks. So as we look through here, it allows you to have a disciplined approach and see what is going on in the overall world. I mean, as we all know, the worst thing to do is to step into a situation and have no idea what's going on around you. Number two, preferred stocks do have negative years 20% of the time, and you do need to have a plan of how to deal with that. And even if you have marquee holdings in your portfolio, we all know that market forces can temporarily cause there to be losses in those. And then I certainly bring this up with my clients, and certainly even in my own portfolio, when you buy a preferred is as important as which ones you end up buying. Again, that's where market analysis can help you a great deal. Now, to do market analysis, as you do market analysis in common stocks, you need to have a benchmark. And actually, one of the reasons that I pioneered the development of a benchmark was for this reason. For whatever strange reason, a security that has been around since the 1850s did not have a modern day index. And certainly the Winans International Preferred Stock Index was what we had developed in order to do the broad market analysis. The WIPSI is designed for one thing primarily, and that is broad market analysis, so you can do the two primary things. Number one, it is to identify current trends in the preferred stock market and obviously changes in those trends. That is one of the main reasons for doing technical analysis. And preferred stocks have trends, and by the way, not identical to common stocks. You need to remember, call these preferreds, not preferred stocks. Number two, to identify the current yields in preferred stocks when you compare the returns of things such as corporate bonds, treasury bonds, and municipal bonds. One thing I talk a fair amount in my book is that it's important for the income side of your portfolio. You need to shop for yield. And there are times when preferreds are a better bargain than municipal bonds. And the same can be said in the other direction. There are times you might be better off buying bonds over preferreds. So again, it's very important that you shop for yield, and this add-on will allow you to do that very in a perfect world. Now, the WIPSI, I've alluded to it already. By the way, it was funny in making it. Trying to come up with the name of an index is always fun, but at least the symbol is easy enough to remember. It does stand for the Winans International Preferred Stock Index. Winans International is a investment management and research firm that I founded 20 years ago, and this is one of several indices that my firm produces. It is also very important to note that this is the first investment index that does deal with daily tracking of price, yield, and also volume from 1980 to present. For those of you who might be using the S&P Preferred Stock Index, do keep in mind that this is calculated very differently, and it covers a longer time frame. And for those of us who are technical analysts, know time is our friend when you're looking at trend analysis, especially with what's happened in recent years. If you want to go back and compare other historical periods, you need to have the time. This index is designed to do that. It is an even weighted index that does deal with enough companies that, and by the way, in very different industries, but what the focus has been is to make sure that these companies have consistently had preferred stocks as part of their balance sheet or of their capitalization. There have been a lot of new players, and in fact, a good example is what happened in 2007. There were a lot of new banks or banks that were issuing new preferreds who had never had preferreds in their portfolios before. And the problem you had was you had no way to go back and track how those preferreds have acted in the past. We have focused on companies, again, that have had these as part of their capitalization for a long period of time. So you do have enough data to go back and do an apples-to-apples comparison with an index with individual securities. As of right now, there is, even after all that's happened since December of last year, about 2/3 of the index is financial services. Now, they are not all banks. They are insurance companies. They are brokerage houses. A large number of real estate investment trusts and home builders issue preferreds. The old standby utilities have been a long-standing issuer of preferred stocks. And then, of course, you have industrial and service companies as well. I will comment that this composite, we do go through an annual review, and we do change it. If there are companies that are no longer issuing preferreds, we do have substitutes that we'll bring in their place. But it is to give you a well-rounded assessment of the universe of preferred stocks, and in my opinion, this index does it better than other competing indices. What can you do with the Winans Preferred Stock add-on? Well, track preferred since 1900, and by the way, that is not a typo. It is 1900. We have monthly and weekly data on preferred stocks going back to the turn of the last century. When we first started doing this, people said, oh, you don't need to go back that far, but we did find in 2008, many people were going back and looking at what did preferred stocks do during the Great Depression, or what did they do during the high inflation years of the 1970s. Again, this is the only index available today that will do that, and certainly one of the reasons that Thomson Reuters through MetaStock chose this in this add-on. It allows you to do your own studies on the WIPSI. Pretty much any technical indicator that you use, whether it is momentum indicators, whether they're moving averages, oscillators, whatever you use, this will work on the WIPSI as you would on certainly the Dow Industrial Average, on the S&P 500, the Russell 2000, you name it. You don't necessarily have to change your toolbox of indicators to use this. It also allows you to be able to, without tracking a huge number of preferreds, which, by the way, there are more and more in the universe of preferreds that are out there trading now. It would be a full-time job just to focus on this by itself. This add-on will allow you to identify, using conventional RSI standards, to find those preferred stocks that are relatively undervalued versus the WIPSI, or that are overvalued compared to the WIPSI, but it helps you narrow down your investment choices on a technical basis. Now, this chart shows the WIPSI on a daily basis since 1980 to 2010. Obviously, we've had it updated much more since then, but keep in mind that, as we commented earlier, there's WIPSI price and there's WIPSI yield. Probably something that's unusual for a lot of people new to income investing is you need to watch both of these charts. It is important to confirm indicators. Believe it or not, even though they look the same, there are times that you want to get confirmation on both the yield and the price. Now, yield means the yield of the WIPSI composite, so that would mean the dividend yield of the average components of the WIPSI. The price means the average price. Keep in mind that preferred stocks generally have a default par value around $25. So you'll notice that although there is trend analysis that will work with the WIPSI, there's a tendency to have it orbit around that $25 par value. So especially very good for oscillators. Now, very simple. Certainly, we're always there to. Those of us who build indicators are always very proud of our indicators, and so obviously, I'm very happy that I think we have the better mousetrap when compared to what Standard & Poor's is offering. But simply put, we have price and yield data since 1900, and as I commented before, we have daily yield and price data since 1980. S&P 500, or excuse me, the S&P Preferred Index, which, by the way, the WIPSI came out 6 months prior to this other index. It has data basically that only goes back to 2003, and I can tell you, although that might sound like a lot of time, it is not nearly enough time if you're going to try to do serious comparisons to the bond markets. It's just not enough time, so I don't think it's valuable. We have yield data back to 2004. There is no, volume data back to 2004. There is no volume data on the S&P Preferred Index. There basically are comparisons in the trend. There is an ETF on the S&P Preferred Index, but I would also tell you that it is very, very heavily concentrated in the financials, much more than the WIPSI. So again, unless you plan to have a portfolio full of financial preferreds, I think you need to focus a lot on the WIPSI itself. So as we look at using the WIPSI more so, I think as anything else, certainly there's room in the market for more than one index. Remember, you have a Dow Jones Industrial Average, you have an S&P 500. There are times people will use those as confirming indicators on a broad market trend. I don't see why you can't do it here. Obviously, you have the ability in the Reuters database through MetaStock to look at both of these indices. Okay, now the interpretation of the WIPSI. I always, as a technician, believe in starting with simplicity first and then adding to that. I always find it funny that I look at, when I certainly teach lectures in technical analysis, and I look at what some of the folks have on their computers, it looks like a modern day fighter plane cockpit. They've got more indicators there than they probably need. And so I've always told folks, look, you know, by all means, you have everything there, but find what you really need and use that first. And especially if you're doing broad market analysis, remember, you're not necessarily trying to have all the stars line up on 10 or 15 indicators. Find what works with your style. So in the case of the Winans International Preferred Stock Index, better known as the WIPSI, I found it easier to start with simple moving averages and find, as it is in this case, the use of the 200-day moving average or the 40-week moving average. Either can be used. Does it work? And I found that, to my surprise, that even though preferreds have an oscillation to them individually, that the WIPSI did have sufficient elements for trend, and that this index and the use of a moving average would keep you largely out of harm's way in bad market corrections. And quite frankly, many people have asked me, well, what happened during the the 2008 haircut, I'm happy to announce that with that being one of the worst hits in the preferred stock market, that the use of the 200-day moving average band, you were out of preferreds in the fourth quarter of 2007 before everything broke loose and really fell apart, and put you back in the game in the mid part of 2009. So again, I think there's a baptism under fire, and this did a good job of keeping you in the right track. And by the way, although we don't have it here, if you take the WIPSI back to 1900, if you're oddly fascinated with what happened to preferreds during the Great Depression, you'll find that moving averages worked very well on that data set as well. Now, the interpretation is very much how many of you probably have used moving averages. If the preferred stock market is in an uptrend, the WIPSI price and the corresponding yield data would be above its moving average, or certainly in the yield case, it's inverse, it would be below its moving average, but you're looking at the same way you would interpret moving average analysis in common stock averages. If there's a downtrend, it means the price of the WIPSI is below the moving average band. If it is a flat market, which if you go back and look at that chart, we'll see that that does happen. You have a sideways channel where the moving average is flattened. It's neither going up nor down. In that case, you want to be, it is very much a preferred picker's market. Let's try to say that 10 times fast. You want to find things in, and it's not necessarily a bad thing, because remember, in a sideways market where traders in common stocks might be frustrated, in the case of preferreds, you're paid so much in dividends, you're paid to wait. You make so much money, even in a sideways market, and certainly that's what's happened recently, where many of the buy and hold investors have been frustrated in the last 12 years with common stocks. The same person who would have bought preferreds would have actually made money during that time. So very important to note that. Don't be frustrated with sideways trends in preferreds. Now, a change in the index trend. Many of you have your own theories of what to do, whether you entirely cash out of your individual investments or your ETFs. But again, if you have a change in trend, you're given ample advance warning by the use of what we're doing here, that the market is changing. And as you saw in that last chart, you get very few whipsaws. That's always the nemesis to any technician, is having to be flipped around a couple times. It gets very frustrating. This is a very clean indicator. It works well, and it will, and as I said, it will keep you out of harm's way in what you could argue should be a more moderate to more conservative part of your portfolio. The inverse situations are also true on signaling new uptrends. Now, the results from 1990 to 2010. There were 8 new signals that identified uptrends. There were 8, believe it or not, 8 signals that identified downtrends. And they were 88% accurate in identifying those trends, which I think for any measure, for any of us who look at different trading systems, is pretty darn good. This was not designed to be an optimization system. It was designed to identify trends. So if you think that moving averages are going to get you in at the bottom or out at the top, that's not what they're designed to do. But again, in identifying trend, it does a very good job. The upward movements were 15%. Now, that might not sound like a lot, but in the world of preferreds, that is actually a fairly big move. Now, remember, that is just price. That is not total return, including dividends. You've got to remember, this analysis is strictly looking at the price side. The same is true on the downside. Now, a 12% hit in price on a security paying you 6%, needless to say, that right there tells you that you have to have a strategy to exit preferreds. That's nice for people to say buy and hold your way through that. Hey, a 12% hit is a 12% hit. It'd take you a couple of years in dividends alone to get back to break even. Clearly a good reason for you to treat these as a great vehicle, very capable vehicle. And obviously the uptrends do go on a long time, but you've got to have a defensive game plan to get out of these things. And by the way, for those of you who are inflationary hawks, keep in mind that preferreds particularly don't do well when inflation is accelerating. So there, right there, is a good reason to keep an eye on it. The range of time between signals is 64 to 22 weeks, so you're not day trading these things. That's another reason why this is set up as an intraday vehicle. Yes, you could do intraday trading of preferreds. I would say, though, that largely end of day is more than enough at this point in time because of the length of time in the signals within the market analysis. Okay, now the downloader. It was interesting when I was writing my 2 books on preferreds, I actually had to trick the MetaStock program to do certain things and think through what to do. And when Thomson Reuters approached me about putting this program together, it was that somebody who was going back and forth between common stocks, commodities, and going into income, that you don't have to spend a lot of time trying to jury-rig the program, that there's a simple downloader that would allow somebody to jump from one type of analysis to another very quickly. And certainly I'm very proud of what we've mutually accomplished. Now, the downloader captures price, volume, and yield, and it allows for ratio comparisons with the Dow Jones Corporate Bond Index. I'm often asked, you know, that we all know the Dow Jones Industrial Average for stocks or the S&P 500, or, you know, certainly if you're looking at commodities, you would look at some of the broad-based indicators there. But bonds are always a bit of an enigma. And, you know, certainly when Lehman Brothers went out of business, they were doing a lot of the bond indices themselves. In my opinion, for corporate bonds, Dow Jones has been producing corporate bond indices longer than anybody else. As you probably have guessed, I'm a bug for doing long-term analysis. They've had Dow Jones corporate bond indices and renditions of them going back to 1913. So again, for those of us that think history is important to study, this is by far the best vehicle to make those comparisons to preferred stocks. And then I'm happy to announce that the WIPSI, you have a lifetime download that is included with your MetaStock subscription, so there's nothing new you have to buy. I always get annoyed when I have to pay extra licensing fees for things, and I felt that it was important that this is an all-in-one inclusive thing. Now, here's a chart of what the add-on will look like. You have several things here. You have the price on top, and you'll notice that it's easy to identify that price because you see it around that $25-ish type range. Obviously, we're looking at a relatively short-term chart here. You have basically the moving average, which is the midpoint, the yield moving average. You notice that there's a green line going through there. That, again, is the 200-day moving average on the yield chart. At the bottom, probably no big surprise for anybody who's used to looking at MetaStock stock charts, there's a volume bar that basically shows what's going on in this market. But what might be unique for you is to look and see the red and green bar at the bottom. This allows you to not have to sit there and try to interpret the moving averages yourself. If you are in a green zone, that is considered an uptrend in the preferred stock market, and certainly where you should expect your prices to move up. If it is a red bar, then you have entered an area where you are now in a downtrend, and that you should probably use more caution if you're going to step in and buy anything new. But the same way you would interpret moving averages, you're doing it here without having to spend a lot of time. And if you don't have analysis takes a great deal of time. This is to try to speed up your preferred stock analysis. Now, the expert advisor, many of you are probably used to expert advisors in other add-ons. Well, it's a very simple thing here. It will remind you of the displays of current trend and preferred market direction. It shows you bullish, bearish, and sideways markets on your chart, and it will help remind you of interpretations. Also, as I'm doing my own analysis on preferreds, my firm is constantly looking at ways to improve the mousetrap, or in this case, the turtle trap. And we will be looking at ways to improve it, and I will make changes to the expert advisor as we have found things that stick out. Certainly, if any of you have read my books, we modified some of our approaches from the first book on preferreds that I wrote in 2005 to the preferred stock, The Art of Profitable Income Investing, that was written in 2010. You know, the baptism under fire of what happened in 2008 made us go back and review certain things. Now, trend example. Notice, as I talked about before, at the red arrows at the bottom, you have the one that was the WIPSI bearish, which means, okay, you were in a bearish phase. But notice where the red turned green. Again, without having to interpret a moving average, you knew that at that point, which wasn't it interesting? Pretty much the beginning of this last year, 2012, notice what happened. The preferred market took off, so you had a very clear indication to get back in, to move ahead. If you had money parked on the sidelines, it was time to forget the headline risk and to hop back in the market. Here's a copy of the Winans commentary, and again, no big surprise there. It just tells you, it reminds you of what the WIPC is. If any of you are going to use this in research reports, certainly this has been cleared with us to use. It allows you to, cut and paste and use it as you want to within your own analysis. Okay, the Winans downloader. This might be a little unusual for you, and keep in mind that when you load the add-on, you're going to get some windows loading this downloader. The downloader allows you access to the WIPC data at this point in time. If you went to go use the Reuters database, just keep in mind you won't at this point find the WIPC data there, but the downloader basically allows us to clean the data up on our end, the Winans International end, but it does allow you access to the Winans preferred stock volume, price, yield, and the ratio data. It also includes the current price and yield charts. Okay, looking at current price and yield studies. Remember, it allows you to easily identify preferred stock studies yield, putting a coupon into the value of your stock. Now let me explain this for you. Some of you might be a little confused with what I just said. When you buy a preferred stock, remember that they were issued at a par value of 25. If they're ever called meaning that the companies actually will buy them back from you. And by the way, this data is can be found on a lot of free websites. It's not as if you have to pay an additional amount. But you should go on the safe assumption that preferred stocks are either called at 25 or multiples of 25. But I think 90% of the time, $25 is your call date. So what you have is you have the price in which it comes in. By the way, this add-on has the 25 as your default price. But in the title of a preferred stock, you know the coupon value. What you care about is what your yield is, not what the guy who bought it originally gets it at, but what do you care about? But you need that coupon value to do a calculation on the individual preferred stock yield in order to make a comparison with the WIPC. Remember I said the default comes in at 25, so again, you don't have to play with that. And I encourage you, be very careful on monkeying around with that default. If you want to have some strange numbers, start playing around with that. Now, just keep in mind, if you find a preferred that is at 100, you are probably going to want to go in there and double check to make sure your default is not at 25, because I got to tell you, that's the mother of all preferreds. If you have one that's at 25 trading at 100, I would probably tell you, take the profits and run. There's not enough dividend out there to do that. But again, 99% of the time, you shouldn't have to worry about that. Now, this is what it looks like on the screen. Very easy, very, very easy to follow. By the way, if you use this properly, put your calculator away, put your iPad away. There is no additional calculations to figure out what your dividend yield is. You have the par value 25, you enter, look at the very top, look at the title. You'll see in this case, one of my favorite preferreds, public storage. You see that it's 6.45, that is the coupon. Remember, the title of this preferred, which is titled by Reuters for you, that is not your yield, that is the coupon. But you're going to take that number, stick it in the coupon, hit OK, and if you look at the far left side, notice that the scale is different than the price scale. You have price scale on the right side, you have yield scale on the left side. You have to look no further. So when you find preferreds getting hit, like in this case back in August of this time frame, back in August actually of last year, look at what happened to the yield. Your yield shot up. It took off. You suddenly went from a 6% yield to a 6.35 yield, but you didn't have to figure out what your new dividend yield was going to be. You knew automatically by what, if you stepped in on that preferred, on that price, you move very quickly. Also, one other thing I'd like to point out, I'll talk about a little bit. Notice how fast the action is in preferreds. Don't look for double bottoms. Don't look for long basing patterns. The yields get so compelling, people step in and they buy them fast. You've got to move quick with these things. This add-on allows you to do that very, very quickly. Now, looking at the preferred stock studies, you have the Winans downloader that comes in. You have the expert advisor that we talked about. You have the indicators. You have the explorations. You have, and on the exploration, I'll talk about that in a moment, is that I believe that, again, keeping it simple, the conventional Wilder RSI with the default settings of 14 will give you enough ammo to go ahead and begin to do basic screen analysis or screening out preferreds that will fit basically bargains. Again, remember, you're trying to find those bargains like we saw in the last thing. They don't happen very fast or very often, but you want to be able to step in on them. So looking here, I know that many of you technicians have been taught that V patterns don't happen very often. Don't look for them. I will tell you that in the case of preferreds, they happen a lot. As I've shown in that chart, 2 charts, or the tables 2 charts back, they are very, very, very frequent. And you need to hop on them. And again, I think oscillators will fit the bill better than even a moving average. I'm not to say you don't use moving average on individual preferreds. If you use moving averages on the WIPSI and you use oscillators on the individual preferreds, I will tell you, you'll find some bargains and you'll have a very timely tool. And quite frankly, this is what we do at Winans International in our portfolios. So here's a copy, and actually this is straight out of my book, and which I would like to also bring up. I know we're going through this very quickly. This is meant to be a Cliff Note version. I would encourage you, if you're serious about becoming an expert in preferred shares, you might want to think about buying my book. You can get a copy of it. We sell it on Amazon.com. It's an inexpensive book. I'd like to think it's a fairly quick read. If you're looking at it from a portfolio management standpoint, if you want the more theoretical stuff, go back and read my first book on preferreds. But here's how it looks. You are trying to take market analysis, which I have bracketed, where the moving averages were below the 200-day, where the WIPSI was below its 200-day moving averages. This is on an individual security. You can see the boxes basically allow you to say, okay, this was in a downtrend. At the bottom, I put the volume indicator, and in volume for individual preferreds, I actually have it set as a logarithmic scale, so it better pops out. But notice that I did the same thing here. This is what I used to have to do before we had the add-on. I had to go through and calculate yields with a calculator, put it on the chart next to the price chart. Very cumbersome, and if you're doing this for a couple hundred preferreds, you can imagine it's very time intensive. It has to be done. You need to know the yield. Remember, with preferreds, you make most of your money in the dividend yields, so you have to make sure you buy them at the right price. Now, the WIPSI, RSI below 30, again, it helps you scan the universe of preferreds, which, by the way, Reuters has a fantastic list of preferreds that are in their own subfolder that allow you to scan that when you have those individual preferreds below 30. In fact, we just recently looked at it. It took the huge number that are out there and found that suddenly 30 were available, and I could focus my research on those 30. This pattern is a great opportunity for trading. Obviously, need to say more. V patterns, they happen fast. If you're paying attention, you're going to get the bargain. Somebody else isn't going to get it. And by the way, I want to bring this up. In preferreds, this is one of the few areas where you have an advantage over institutions. This is not so big of a market that many institutions even want to deal with it. In fact, I've had talks with large pension funds about this, and it's the same thing I hear. Yeah, we agree. This is a great thing, but it's just too small for us in our multi-billion-dollar pension funds to deal with. So you, as a trader, think of this in some ways like micro-cap common stocks. You've got an advantage here. You are getting to do something that the large institutions can't do. So again, it's a way to enhance the return in your portfolio. With the exploration, as I said a moment ago, you can quickly screen the preferreds that are below 30 on the Wilder RSI, i.e. oversold. By the way, I would really encourage you to focus on the oversold. Overbought, there's other things to use, but I found particularly looking for the oversold positions is a better way to go. You're going to find that you narrow down your research very quickly, and you can move ahead from there. A Wilder RSI below 30 in itself is not necessarily a buy signal, but again, I would view it as a way to narrow down your list and use your own analysis to make your final decisions on which preferred you want to buy. It is important to note, you're probably going to find some cases where an issuer, like I mentioned Public Storage earlier, hey, Public Storage might have at any given point in time 20 or 30 preferreds. So you might find that this screener might give you on any given day, if there's some bad corporate news coming out of any one company, you might find that most of the preferreds you see are all from one company. You will have to do some analysis on which preferred would better fit your portfolio. But by all means, I'm not saying buy all 30 preferreds of one company. If you want to do it, that's great, but certainly I don't recommend it. But just keep in mind, this is a way to screen and narrow down your choices, but certainly not the only thing you should be looking at. Now, and kind of wrapping some things up here, remember you get the Winans downloader that downloads the Winans International Preferred Stock Index, better known as the WIPSI, price, yield, and volume data going back to the turn of the last century for long-term analysis. You get the expert advisor that I will do my best to keep updated on developments that we see with preferred stocks, and certainly the baseline interpretation of what you should be looking at. The indicators themselves, the explorations, which again, I can't stress enough. If you do not have an army of analysts working for you, this is a great way for you to be on top of where bargains are in the preferred market. And the chart templates themselves. The Winans chart, which is the combination of the price and the yield all on one chart, so you don't have to do dual analysis. The WIPSI chart. And the Winans chart, as I mentioned before, is a way for you to look at price and yield and all in one template. I can't emphasize it enough. There was a lot of time and effort went into what do I have the time to do. This is one way of doing it that will save you a lot of time. The WIPSI chart example, again, we're going back over this because it's important, and I apologize that this is not in color. Believe me, on the add-on, it is in color, much easier to see. But again, you have price of the WIPSI, the yield of the WIPSI, and you also have certainly the volume, and then the color code at the bottom that tells you whether this is a bull or a bearish trend that you should use caution in. To obtain a preferred stock database, you're going to want to have a Reuters data link account. Now, this is for the individual preferred stocks. This is not necessarily for the WIPSI data. If you just want to use the WIPSI for itself, that's fine. By the way, you can cut and paste and put the WIPSI over any other established index. I think you will find this fine, which I would like to bring up very quickly. You're going to find that, remember, preferreds are exchange traded on the New York and the NASDAQ. If you use corporate bond data and you use such as you have your own database, there can be some times where bonds trade when preferreds or common stocks don't. Don't be frustrated, but you might have to go in to the downloader and clean up the data yourself, or contact us directly through Thomson Reuters, through MetaStock, and we'll be happy to help you with that. But you can get some weird bars that can show up in your data from time to time depending on what you're doing. But here's the information here of who to contact and all the rest of it if you need any help with this. So in obtaining the preferred stock database, remember you have the symbols. Preferreds have symbols. If you're used to the common stock symbols, it's usually a letter, a dot, and a letter after the main symbol. But certainly you have the North American symbol utility. This includes all ready-to-download folder of preferred stocks and warrants. I have to tell you, this is a big deal. Try to find that anywhere else. I think you're going to find it to be a daunting task. This is clean and ready to go, and certainly they do a great job of adding and deleting preferreds that do come up. This is a hot area right now. A lot of companies are adding new preferreds, and also remember, many preferreds can get called. So what I have seen so far, this universe stays up to date, which is very, very nice. Here's a copy of what it would look like in your folder, looking at MetaStock data. Oh, let's go back one second. There's the folder. And then in my case, you have been nice to listen to me. I probably should have done a better job of telling you folks who I am. Certainly you can Google my name and see all the rest of it. But just keep in mind that I am somebody who uses this research. This is not somebody who built a theoretical model. I use this stuff every day. I have written 3 books. I do a lot of TV and radio shows. Well, certainly I mentioned earlier that my firm is a research firm, the WIPSI, and then we also have a real estate index that we have developed that actually looks at real estate back to 1830 for those of you that might be curious. And if we are out there, we might from time to time exchange some preferred stocks. We do manage equity and fixed income investments for 141 clients and growing throughout the country. So do again keep in mind, I think rest assured if you are using this, that I developed it to be used by a trader or somebody who's an investor. This is meant to help you do a better job. And please, I'd love to hear from you directly. Feel free to email me and let me know how it's going, and certainly be happy to help you in what you're trying to do. And with that being said, as we begin to wrap up, just again, final things that are out there for you. I would just tell you, I think you will find that this is going to add to your arsenal in being a trader. There's no reason for you to go through a terrible time of not making money. Preferreds and bonds and income have been the hot investment for the last 12 years. I don't think any of us think that the world is going to become a bright, shiny place anytime soon. Remember, the Dow Industrial Average went sideways from 1965 to 1982. 16 years of nothing. For the buy and hold people, nothing. During that time, income investments did phenomenally well. There's no reason to believe that we're going to leave this S&P 500 channel that we've been in for the last 12 years. This is a way to enhance the return of your portfolio. And by the way, really great for the kids' college funds and for your IRAs, where probably your significant others don't want you to trade that, but these work well. I would also suggest, by the way, do remember they're taxable. They are perfect for tax-deferred accounts. It really is a good place to put them. And I will just, here's the price and the order information and a 30-day guarantee. But before you get frustrated and cash it in, stick with it for a while. I think you're going to be real happy with it.